Markets completely ignoring the inflation number. We're up and away.
I'm surprised with the ability of the market to shrug off bad news. And the reason why Indian markets, or for that matter global markets, are outperforming is because Bernanke yesterday has given markets much more what they wanted. They wanted QE3. Bernanke has indicated that it will be QE3 but with a difference, which is it will be an unlimited QE3. So global fund managers, global traders are convinced that in the near term there is abundant global liquidity, and that global liquidity for sure will ensure that in the near term all prices, all asset prices, they remain elevated. So it's a rising tide, and the rising tide once again is taking all ships up. Yes, somewhere there is an element of short covering as well, but I'm really surprised with the staying power of this market. The fact that after a gap up open, even the most of the short squeeze is behind us, markets are trading almost at the highest point of the day. So if I map market internals, things are looking charged up. We have seen a lot of green on the screen in the first hour of trade, and my sense is that for the rest of the day as well, the green is here to stay.
Absolutely, but let's also just map out some of that macroeconomic data. In terms of the inflation numbers, it was at the higher end of the trajectory, coming in at 7.5%. But markets absolutely paying no precedence to that. We're still holding on to 55.50 on the index. It's the primary articles inflation that have cooled off marginally, 10.08% versus 10.39 last time around. You have the fuel inflation also, which has come in at close to 8.3%. Food articles, it has tempered off from a double digit of 10.06% in the month of July to 9.14 in August. The WPI inflation, the entire provisional figure, has also been revised at a higher digit to 7.5% versus 7.25%. And you heard out the RBI Deputy Governor that said that inflation continues to remain on top of the RBI's mind.